2 days of poor closes at 5-day lows during a long-term uptrend have always been followed by a bounce in the SPY. Will today follow through on those historical probabilities? Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:49 a.m. Central Time, and I am recording this in preparation for market day, March the 12th, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive in and see what happened in the overnights. We had generally positive returns across all the key U.S. futures markets that we follow. All four broad market indices are up as of the time of this cut, about 1/3%. Crude oil up more dramatically, up about 0.79%. The euro about 0.65. Bonds about 0.4, and gold about 0.2. So everything pretty bullish overnight. In terms of overseas key markets, also bullish. China up 1.78, Hong Kong up 0.34, Japan 1.43. Germany, perhaps the most stale market, basically scratch, with the FTSE up about 0.8. In terms of macroeconomic reports today, we have all the typical Thursday reports: retail sales, core retail sales, unemployment claims, import prices, and business inventories, followed by a yellow report with natural gas. I should note that there is a 30-year bond auction, so if you are a bond trader, that might come into your wheelhouse at some point today in the middle of the day. For Friday, we had PPI and the University of Michigan Consumer Sentiment, and that's the one that comes out during the middle of the trading day, so be aware of that coming up for tomorrow. In terms of our volatility, yesterday calmed down a little bit, and you see some of these values and the historical IV percentiles dropped. And really there's nothing really get too excited about here. We've been so used to low volatility lately that even when we get up into the 40s or perhaps even 50, we want to get a little excited. But historically, obviously, this helps us keep this in perspective, and these are relatively low values. In terms of standard deviation moves, there were no standard deviation moves yesterday. Very, very calm day, especially compared to the 3-day period prior to yesterday. Short-term volatility on the S&P is 16.78 for the VXST, so perhaps a little higher than has been of recent. In terms of our regular report, we do have Euro contract rolling over this week. I took a look at the volume just a few minutes ago, and there was still more volume on the old contract than new. You also have index futures, so your S&P ES, Russell TF, Dow YM, and NASDAQ NQ futures contracts all going to be looking to roll over. For most people, if you're trading on Thinkorswim, you're probably seeing where they force the contract onto the new today, but you actually probably have more volume on the old contract, and if you're intraday trading, you might want to force that back to the old contract for today's trading. Tomorrow, I would suspect that you'd be on the new contract and that you'd find more volume on the new, I guess it'd be the June contract, so kind of be aware of that. The other thing that this means is that when we're in contract rollover on the broad market indices, this often sets up for something of poorer intraday trading, because volume split between two different contracts, follow through on setups doesn't seem to quite go the way you expect it to, so things can be a little choppy, and a bit poor on intraday trading when you're in contract rollover. So just kind of be aware of that as you position size and take setups today. We are still in phase 3 on an intermediate term phase opinion. Higher highs and higher lows is the expectation, though there are warnings. Portfolio investor posture does have IBD status as uptrend under pressure, and the GMI index, as was yesterday, is still a 3 out of 6. Active trader market posture is bearish at this point. We'll go into a little bit more detail on that in just a moment. Position sizing opinions for investors: buy side long portfolio exposure up to 80%, and a call or opinion to not initiate new bullish positions for short or intermediate term positions. Core portfolio is something of a different decision, but you certainly should be careful in initiating new positions against the backdrop of this IBD status and GMI index. Active trader position sizing opinion based on volatility, still in the 75 to 100% of full position. Market timing opinion for today: you heard the little factoid at the beginning. 2 days of poor closes at 5-day lows during a long-term uptrend has always been followed by a bounce and the SPY. So look for signs of that, and certainly in the overnight we've had something of a bounce already, though not too dramatic. Now it said bounce, it didn't say that it's going to go to the moon. 1-day outlook very bullish, 3-day outlook very bullish, but that is against the backdrop of in the intermediate term time frames that were bearish in our market posture for all 4 indices. So you see we've got a lot of different tidal forces going on right now. You've got the very, very short term outlook perhaps is bullish with a bounce expectation, and yet most traders would probably be looking to take advantage of any bounce or rally to sell and reposition for a next bearish leg down. All that within the longer context that we're still in a long-term bull market. So this is really calling for very, very nimble trading right now, and care in your position sizing and initiation of new positions as you are caught in the middle of this tidal pool going in multiple directions, really all at the same time depending on your time frame. Our hedge warning status still remains at level 1, so that should say something right there. Volatility based, we still have a number of flags. Market in decline has fired off again. Sharp increase warning has fired off. We have distribution day count currently at 5 in the S&P. VIX has been trending up in recent days. And of course you have our market posture is below 80 on all 4 the broad market indices. Another warning is our new high, new low on the New York Stock Exchange for the 1 month time frame. 72 new highs versus almost 10 times that on new lows at 698. Anything over 300 is a warning sign. On the intermarket risk aversion indicators, you have basically most of these are neutral, with one clearly signing as a risk off. So that is also something of a warning that we're certainly not strongly postured for risk on move. Option income strategies, acceptable. Covered call, looking for an equal distribution between in the money and out of the money. Put selling, looking for opportunities actually to sell puts against the core portfolio basket of stocks that you are willing to own in the position size that you are truly willing to take possession of. And let's get down here to sector market posture. Lots of red on our short and intermediate term, bleeding over into the long. Very, very little there to be positive about. Consumer discretionary, healthcare, retail probably are the strongest sectors and most consistent sectors at this point, but certainly everybody is having trouble right now, and you see that over here. And the percent change for yesterday, financials and energy, telecommunications all eked out positive days yesterday, but most of these sectors, including those with the long-term, positive returns in terms of relative strength, were negative yesterday. So look at this down here at the bottom. Consumer staples down 0.78, utilities. So a lot of the lower beta were really hammered yesterday. So at the same time, while some of the higher beta did perform better yesterday, it certainly was not uniform. You've got technology down here at the bottom of this list. Top industry groups, really no changes here. Retail, railroads, internet, healthcare, transportation, followed by biotech. Same 6 at the top. That should tell you something, though, that we've consistently seen these 6 industry groups in the top of this chart from Shadow Trader. That should tell us that this should be our focus when we do get the all clear to move ahead and initiate new positions, that we should be very much focused on these industry groups. As always, greatly appreciate you each and every day. We, in return, ask that you like us on YouTube or your favorite social media platform, wherever you are following us. Greatly appreciate that courtesy. Support, as always, at falconglobaltraders.com. Additional information available on the website about any of our products, including our daily price guides for day traders in 16 key markets. Disclaimers, as always, just hit the pause button if you need more time to review this. And then, as always, we greatly appreciate you each and every day in the Falcon Global trading community. Good trading, and we'll see you tomorrow.